The Federal Reserve is finally starting to pivot. This is David Wickwire with the Wickwire Group, licensed lender, also a licensed realtor. Wanted to give you an update on inflation, interest rates, and everything that's going on with that, especially since the Fed Chair, Jerome Powell, spoke at the Brookings Institute on November 30th and indicated just that given recent data, that they're going to start to lower the rate increases that they've been putting on the Fed funds rate recently. The last 4 increases have been 0.75% or 75 basis points, and they've done 4 of those. So that's the most aggressive increase of the Fed funds rate in modern history. So good to see that they're backing off of that based on recent data. We've seen the consumer price index, or what most people consider inflation, drop from 9.1% a few months ago to 7.7%. So it is trending in the right direction, although it is still high. The Fed also looks at something called PCE, which is personal consumption expenditures, and that includes every item, not just out-of-pocket items. So things like health insurance, other things that you don't just directly buy as a consumer, a more broad indication, which is also trending downward. So that's a great sign. So we're seeing the 10-year Treasury yield drop. It's been as high as 4.35% in the last few months. Now at 3.5%. May not sound like much, but it's a big reduction, and it's trending in the right direction, which means interest rates are dropping. And if the Fed continues to back off on these rate increases and maybe even stop the rate increases altogether by the end of next year, then we do expect interest rates to come back down and maybe return to some sort of normalcy. Today, the new jobs report came out, and the economy added 260,000 jobs, which is more than expected. So it's nice to see that they might start backing off on interest rates a little bit, but the economy is still pretty strong. Corporate earnings are still strong, unemployment's still low, jobs are still looking pretty good. So that soft landing that everybody's looking for may still be possible. We'll just have to see. The next big number that comes out is on December 13th, my daughter's birthday. So the new CPI number comes out, and we're hoping to see a number that's markedly lower than 7.7%, hopefully even into the 6s, which will only reinforce the Fed backing off on these rate increases. And like I said, hopefully we can get back to some sort of normalcy and all get back busy again with real estate. So any questions, concerns, or want to discuss real estate, what's going on with the financial markets and how to understand all of that, give us a shout here at the Wickwire Group at 703-625-4779, or you can contact Jen directly at jenwickwire@gmail.com. Thanks a lot, and take care.